Hey everyone, and welcome to this video. Today I wanted to talk you through the S&P 500 ETF that I buy every Monday. So the ETF is called Vanguard S&P 500 ETF, and the ticker symbol for that is VUSA. Basically stands for Vanguard USA. And so we can see over the past 5 years that this fund has returned 83% over that period. Over the past year, it's returned 21%. Year to date has returned 18%. And if we actually take it all the way back to, I believe, when the fund was kind of created or started in 2012, it has returned over that period since then, what is that, 9 years, 281%. And obviously, that doesn't include any dividend sort of distributions over that period, but we'll get into that a little bit later on. So, I wanted to just kind of give you an overview of this fund and talk you through, I guess, why I like it and give you a bit more information on it. So, let's jump over to this website. So, this is the Vanguard Investor website. I believe they have kind of websites across the globe that cater for investors from many different countries. This is the UK division, if you like, and on this website you can essentially manage your portfolio of investments. They primarily cater for investors who want to just specifically buy funds, and obviously, you know, I think a large number or all of their funds on this website are by themselves, by Vanguard. Obviously, if you want to go to a different provider, you can go to their website, but Vanguard solely are dedicated to funds. I actually don't buy this ETF through Vanguard. I actually buy it through the trading app called Trading 212. It's just that the way I'm kind of set up, or how I've chosen to purchase it, is through that app. But anyone can come in here onto Vanguard's website and create an account and begin investing into whatever kind of funds they want. But as I say, this is the ETF that I buy into every Monday on a weekly basis. So let's take a look at some of the kind of data and some of the information on it. So as of today, the 8th of October, 2021, the price of one kind of unit, or one of the ETFs, if you like, is £61 and 20p. So for that price, you can obviously just buy into that fund. And what that does is essentially gets you immediately kind of diversified and invested into the 500 or so. You'll see it's actually over 500, but the 500 companies that make up this S&P 500 index. So if we click in here, yeah, it says this fund invests in a large number of companies, bringing you the benefits of diversification. So the S&P 500 is the 500 largest companies by market capitalization in America. So the fund essentially aims to passively invest into those 506 companies that make up that index. And you can see that underneath. The objective is the fund employs a passive management or indexing investment approach through physical acquisition of securities or shares, and seeks to track the performance of the Standard & Poor's 500 index, or how they're referring to it throughout the rest of this as the index. The index is comprised of large-sized company stocks in the US, and the fund attempts to track the performance of the index by investing in all constituent securities of the index in the same proportion as the index. What that basically means is just by the same kind of percentage basis, or the same amount that each share makes up in that index. That's how they'll kind of allocate their funds. So we'll come on to look at the kind of top 10 and what stocks, are what proportion each company or share makes up in the index. But for example, I think Apple are in the top five, if not the top one or two. And they actually make up, I think, like a couple of percentage of the overall kind of 500, if that makes sense. The second kind of aim that it says here is they aim to remain fully invested except in extraordinary market, political, or similar conditions. To be honest, I don't actually know entirely what that means, but I guess it's just something to be aware of and to note. You'll also notice here the ongoing charge, or sometimes commonly referred to as kind of the ongoing expense fee, is 0.07%, so very low compared to a number of other kind of funds. Some funds, depending on the aim and how kind of passively managed the fund is, they'll differ in terms of how much the expense fee is. Basically, what that means is, as it says here, ongoing charges include management fees and costs we incur to run the fund. Transaction costs are incurred when the funds buy or sell holdings and includes expenses such as broker commissions. So it's effectively a small percentage to manage the fund on an ongoing basis. So let's jump into what stocks and industries make up this fund. So you can see here again, the number of stocks is 506. As we scroll down, this is the section I wanted to get to. So weighted exposure, this shows you what sectors actually make up the fund itself, the ETF itself. So we can see here, information technology, basically technology, makes up over 1/4, so 27%. And kind of as you go down this table, it shows you the breakdown of each of the sectors. So healthcare, 13%, consumer discretionary, 12%, communications, almost 12%, financials, 11%, industrials, 8%, consumer staples, 5%, and on and on. So just a helpful kind of breakdown or overview as to what sectors actually make up this ETF. And probably more interestingly is this next section. So this is the actual individual holdings in terms of the companies. So as we can see, yeah, as I kind of mentioned earlier, Apple is the top holding and makes up 6% in terms of the overall kind of allocation into the fund. Microsoft is second, almost 6% as well. Amazon, 3.8%. Then Facebook, Alphabet, both Class A and Class C. They're just basically two different classes of shares. You'll probably know Alphabet better by Google. Alphabet's basically the parent company. Then you've got Tesla, Nvidia, Berkshire Hathaway, and JP Morgan. So they're the top 10 holdings, I believe. And then as you go on, you can kind of see, you'll recognize a number of the other companies that make up this ETF. But just helpful to know that your money in this fund is diversified across a wide range of companies across, multiple sectors. And I suppose as well, they're all recognizable companies that you will be aware of and probably and likely use the products and services of theirs. So let's jump across then to distributions. Basically what this is it's the dividend kind of income that the fund provides. So on an ongoing basis, it's called a distribution basically because an amount that is distributed to each of the shareholders on a quarterly basis. So as you can see there, yeah, the frequency is quarterly. The yield as of the close, that basically means the price at which this fund closed at on the 31st of August of this year. That's what the yield here is, 1.08% as at the close of 31st of August. And then as we go down, you can kind of see the previous historical payments for each of the quarters. So the most recent one was 25 cent, so 0.255 cent. And basically what these dates are, so the ex-dividend date, if you held or if you had basically bought into the fund or you were holding a number of units of the fund, before this date. So say you held, let's say, 10 units of this ETF on the 15th of September, then you would essentially be entitled to receive this distribution. Obviously, if you've been buying it and just holding it for many months and years, then you'll always be entitled to each of these. But I guess my point is you must have owned it before this date to be entitled to receive this payment. The record date is then essentially just a more a date for the fund to look at the record of all the shareholder names and check who is going to be paid the distribution. And then obviously the payable date is just the date that actually the payment is made to the shareholders. So you'll notice that this is in dollars, and obviously the fund is in pounds. I'm actually not sure why this is here in dollars, but a quick kind of Google will tell you, how much you'll be paid in pounds if you're from the UK. Don't think there's anything else to note on this tab. We'll then just jump across to costs and minimum. We covered the ongoing charge or expense fee. On the Vanguard website, you'll notice that in some instances or cases, you may be kind of limited, or you may be kind of bound to their limits or their minimums. So as a one-off payment, if you just simply wanted to drop money into this fund, you would have to put in a minimum of £500. If you were to set up a monthly direct debit, I think the minimum then is £100. So just worth noting. On the Trading 212 app that I use to buy into this fund, they actually provide a service or a way to invest that's called fractional shares. So basically what that means is you can buy fractions of ETFs or of shares. So for example, this fund is obviously, like I mentioned, £61. If you wanted to purchase, let's say, 10% of that, which would obviously be around £6.10, you would be able to do that through Trading 212. They just don't have these types of minimums. I think Vanguard, in terms of this website, is probably more set up for people who are perhaps keen to just more passively invest and maybe set up that kind of monthly recurring direct debit in order to consistently just buy into this ETF. So I think that covers most things in terms of this ETF. Definitely interested to hear kind of, has this been useful, or do you have any questions? Please leave a comment down below if you do have any questions or if you find this helpful, and I'll try to get back to you. Thanks.